All right, guys. So you are welcome to my channel. So this is a continuation of our videos that I've been posting so far. So basically today I'm going to give you an update on what is happening on volatility 100 and a quick update on volatility 75 as well. So let's look at volatility 100 first of all. So if you are new to this channel, you should kindly consider subscribing because I'm going to give you update on the market every blessed day, and I'm going to give you my bias for the days on the market and how you should set your trades. All right, so you have to actually take time and listen to the video very well from the beginning to the end, because there are some vital information that I may say or I may give out that if you keep skipping the videos, you may miss them out. All right, so today's update on volatility 100. It's just a quick one. So this is a monthly time frame on the volatility 100 trading pair. So this is synthetic index, synthetic volatility index pair, volatility 100. All right. Okay. So on the monthly time frame, what do we see? Yesterday, quickly, I told you about breakers on volatility 75, and quickly, I'm going to draw your attention to a very nice breaker that was formed here. Okay, let me quickly try and deepen the line a little bit. So this is a quick one. So we have point A. Let me quickly bring my tool. So we have price move from point A to point B, and then again price move from point B to C. Okay, anytime we have such movement, and then price move from point C to the next point, which takes down the low of point B. Necessarily what we expect is that price should retrace back into point B and then retrace. Price should come and take the liquidity resting inside point B, or mitigate or make up for all the losses, or price should retrace back into this point B for the market makers to close all their entries or begin to take partial profit out of the market, and then they continue rallying down. Okay, so let me try and point A. So this is point A, point B, and then we have point C. Okay, so that is it. All right, so from point A to point B to point C, and beautifully we have what we call a breaker. All right, so what are breakers? Breakers are basically breakers are basically price point within which the market makes adjustments. Okay, breakers are price point that market makes adjustment to sweep down the liquidity resting below just a recent high. Okay, and then takes price into the sky or beneath after sweeping the highs or the lows, and then it rally on the opposite direction. So what forms the breaker? The breaker is formed within point A to point B, and which of the price points here, or which of the price action happening here, or price candles, would be considered as the breaker. So basically the breaker becomes the particular candle. So let me take all this from the chart. So breaker becomes the last, if we are considering price rallying down, or if we are in a bearish market, the breaker becomes the price point B, but we consider the last bearish candle. So this particular bearish candle here forms the breaker. Okay, so what do we consider? We consider the wick, from the wick of the candle to the high of the candle to the low of the candle. Okay, that forms the breaker beautifully. Okay, so that is the breaker. So we consider this particular candle as a breaker, and then what happened next? So after price moves to point C and retraces back below point B, we expect price to retrace back into point B. Any retracement into point B, we execute a trade. Now watch this. Those who are familiar with my things and what I teach and the explanation that I give, which is purely from my mentor Michael, is that you could see that price traded into the mean threshold. When we say mean is statistics. Mean means the middle. You see, so watch this particular candle here. The middle of this particular, the body of the candle here is the mean threshold of this candle. When we say the mean threshold of a particular price point. So if I pick this candle, the mean threshold of it is the middle. Okay, so the mean threshold of this particular candle that we are considering as the breaker, price retreat broke below it, makes it a valid breaker, then price trace back into the mean threshold of it, and then what do we have? We have the downward movement. So imagine you had a trade entered here, and we are talking about volatility 100, which has a very wild movement. You get it? So price straight back into the breaker, and then it rallies down. Anytime we have price trading back into a breaker and rallies down, because it tells us that price is actually moving quite, price is on a search to move to whichever direction is going, push further. Okay, so on this note, I would want to say that, so what must we expect? Price is seeking to take liquidity. Now it formed a low here. Now price has traded into the mean threshold of the breaker, and then has traded below this liquidity point, which is the lower point, these two lower points here, these two price lower points here, liquidity resting below it. Which liquidity is resting? What am I talking about? Liquidity resting below? What I mean is that the retail mindset says that there is what we call support. So far as price traded here and rallied back up, they call this point support. So what the retail mindset says is that anytime price trades back into this, their expectation is that price is going to trade to this point, and then price will rally back up. You know, that is sorry to say, that is the mindset of the retail person. All right, but the market makers do not consider that. Market makers are looking at where the retail are offering to buy, and then they will sell against them and go the other way. So now there's liquidity resting below this, so price traded below it. Now all their buy orders have been sold. They've bought, but they've bought, and then the market makers have rather sold. So the market went soar against them. So immediately they saw this particular price movement, they also want to join the market and then buy, and then price begins to also collapse again. So the retailer is always on the other side of the marketer. So the retail person believes in indicators, putting moving averages on their chart to see things. I don't support indicators. Why? Because indicators do like whatever indicator is telling you is happened already. Indicators are just to tell you. So imagine you are driving and you want to negotiate a curve to your left. Would you just imagine it, or you turn on your traffic indicator? You would definitely turn on your traffic indicator though, but it is initiated by a human mind. Your mind tells you that you are going this way before you turn it on. You get it? So basically the mind is more like the market makers, and the object is just like the object, which is the traffic indicator in the car, is just like the indicators. They are just indicators. That's why we call it traffic indicator. It just indicates where the mind wants to go. Not the traffic indicator doesn't just indicate and tell the mind to go somewhere. No. So that is what happens with indicators. Okay. So this is what happens with retailers. Here is a support, so when price gets here, buy, and then it trades against them, and then their stop loss is taken. All right. So basically, that is how the market makes trade. Now, so what is transpiring now? What is our target now? As market has traded into this area, traded into the breaker, and then has been rejected down. What is my expectation? This is on a bigger time frame. Okay, so don't take my words. So one of the important things that I have always to tell you is that my videos are for education purposes. All right, they are not for your investment advice. Yeah, for education purpose. All right, so now watch this. I am expecting price to sweep the low below this. Yes, I'm expecting price to come and sweep the low. It's a long term, for price to do that. But before price does that, this is on the monthly time frame. Before price does that, what necessary must price do? Price must fulfill all necessary liquidity, take all the necessary liquidity resting in here or above to rally it down. Okay, so let's go to our weekly time frame and see what we are trying to explain. So is there, on the weekly time frame, do you see any liquidity resting above anywhere that price must necessarily work on before it rallies down? Yes, probably there is. So what do you see? You can see a lot of liquidity void. You can see some fair value gap resting in here. So quickly, let me show you where some fair value gap is resting. So beautiful. We have a very beautiful fair value gap resting in here. And then we have some tiny fair value gap also resting inside this area as well. Okay, so there are some fair value gaps resting in here on the weekly. So this is a weekly fair value gap that price can necessarily come in, take down the fair value gap before it rallies down. Do you get it? Price can necessarily trade into it before it rallies down. All right, and then let's look at it on the smaller on a daily time frame. That's volatility 100. Let's look at it on the daily time frame. So what can you see on the daily time frame too? So price has swept the low, resting below this point, and then it's beginning to push up. Push up to do what? To take down more liquidity. What can you see on the daily time frame? I can see beautiful here that there are two equal lows resting up here. These are two beautiful equal highs, sorry, resting up here. The price can necessarily, after it has taken down this high, it can necessarily run into it and then sweep this equal highs here. Whatever it wants to do, if price sweeps this equal highs, my target is that it has to close in on this fair value gap, on this weekly fair value gap. Okay, on this weekly fair value gap. All right, so that has been it with the daily time frame. Let's look at it on the 4-hour time frame. On the 4-hour time frame, basically this is what you also see on the 4-hour time frame. All right, so on the 4-hour time frame, you could see that price formed high, low, high, low, high, low, high, low, high, low, high, low, and then this high has been broken. So necessarily what I would expect is, if I have this point as point A, point B, point C, okay, so from point A to B, and then from B to C, what do you expect? And then to whichever level is going to, in as much as point B has been taken down, I am expecting that price would come back, retrace back into this area, and then take some liquidity and run up. So now if we are looking for a breaker within this area, where do you think, which price point do you think will be considered as a breaker? If this is point A, point B, point C, where do you think the breaker will be? Now the breaker will be this bullish candle here. Beautifully, to be this bullish candle here. So you draw your lines beautiful in here, wait for price to retrace into this bullish candle, then you can, or better still, you see, because the wick of the candle is considered as part of the breaker, price can equally come into this breaker, just not the breaker. We have this particular price point also being a fair value gap resting in here. Okay, this is a beautiful fair value gap resting in here. There's another one, a little one resting above it. Oh, this is a very sweet run up. Okay, so whichever level price would hit and want to retrace, which I'm expecting price to either retrace on this particular price point. Why do you have to say that price must retrace at this particular price point? There's a fair value gap resting up here. Okay, price can necessarily go and take it down. There's some almost equal highs here that price can necessarily come in and sweep, but I'm expecting that price shouldn't quickly rush into this fair value gap and then either retrace back into this or retrace almost into this swing that it will form here, retrace into the mean threshold of it. If you measure from here to whichever area it will reach and it will retrace, half of it will be an area where it has to retrace into, and then maybe it can go back and close in on the fair value gap, and whatever it wants to do up here, price can do. All right, what is my bias for tomorrow? Let's wait for the closing of today and see. Tomorrow by afternoon, I should be able to, in the morning, by morning session, I should be able to find my bias based on what will happen in the Asian session. Then I'll know my bias for the day. All right, so beautifully, this is what price is doing on volatility 100. All right, so nicely, let's look at what is going to transpire on volatility 75 as well. So based on what yesterday I told you that there are equal highs here per yesterday's video. Those who watched the video, I told you that there are equal highs here, and price was, my target is that price is going to take this equal highs. So my bias for yesterday, as I told you, was bullish, and beautifully price just did that. So look at this fair value gap that which was resting in here. What did price do? Price traded into the mean threshold of that fair value gap, and boom. So where was the price point that price had to swing up? Price traded into the mean threshold of that fair value gap. Now let's go down to a smaller time frame to really understand it well. So this is it. Price closed in on this. There was a fair value gap resting here, and it was exactly the mean threshold of the fair value gap on the daily. And what did we see? We saw the rally up. So as I told you, my bias for the day was bullish, and beautifully price is going, and all that I'm expecting is for it to just sweep the liquidity resting above the daily, the equal highs here. All right, so that is so beautiful. Price has delivered, all right, beautiful delivery. So if price should close in above this, I'm expecting it to push further. Okay, so what I'm expecting is that price, even as price has just retraced into this, well, it can be a different story tomorrow, but let's see what happens, how price is going to close in on this price point. Okay, because initially you knew that I told you about this rejection block resting in here that was rejecting price all the way down. Hopefully price should be able to rally and break through this rejection block into the bigger monthly fair value gap that is resting up here. All right, so guys, today I wanted it to be a very quick one. That's all for now. So if you are new to this channel, please subscribe, and then keep watching, and then also share for others to like the video, and then enjoy your day. All right, I wish you all the best.